Get ready because the crypto world is absolutely electric right now, and you're about to get the inside scoop on what's making waves. From major economic signals to unexpected celebrity ventures, the pace is relentless, and missing out isn't an option. We've got the critical updates that could shape your portfolio. Stick around, you won't want to miss this. First up, traders are on pins and needles as the Fed prepares to speak. We're diving deep into the signals that have Bitcoin options traders locked in a high-stakes standoff. Then, it's the wild world of Memecoins as a music mogul launches his own digital currency, sending shockwaves through the market. We'll break down the explosive rise and what it means. Plus, get the latest on Bitcoin's profit realization trends. And a crucial warning from an industry insider about where smart money is flowing in Asia. Stay tuned for all the essential intel right here on Bitcoin Bulletin. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Bitcoin options traders split ahead of Fed's Jackson Hole meeting. Traders are bracing for impact as Federal Reserve Chair Jerome Powell is set to deliver his highly anticipated speech at the Jackson Hole Symposium. This event is a critical juncture, with conflicting macroeconomic signals and mixed investor sentiment leaving the directional bias for both U.S. equities and the crypto market in a state of flux. The recent July CPI report had initially ignited a bullish sentiment, with hopes for rate cuts fueling a rally that propelled Bitcoin to new all-time highs in the first half of August. However, the subsequent release of PPI data has rekindled inflation concerns, creating significant ambiguity around the Fed's future monetary policy, specifically whether rate cuts are on the table this year. Bitcoin's price has reflected this uncertainty, dropping approximately 8% from its August 14 peak of around $124,128 to $114,170 over the past 7 days, according to CoinGecko. Despite Bitcoin hovering near record highs, market sentiment is divided. John Haar, managing director at Swan Bitcoin, noted that the market is pricing in an approximately 85% chance of a rate cut at the September FOMC meeting. He anticipates Powell will maintain a neutral stance to preserve flexibility. While bond traders remain convinced about a September cut, this divergence in expectations is clearly visible in the derivatives market, where trading activity shows a near-even split between bullish and bearish positions, according to Adam Chu, chief researcher at GreeksLive. He also observed that short-term implied volatility has declined, suggesting institutional investors are not anticipating significant market swings from this particular meeting. The market's reaction will largely depend on Powell's tone. James Jernetsk, CFO at Exodus, highlighted that many investors are anticipating a rate cut and emphasized the importance of paying attention to Powell's commentary, which could be as influential as specific policy details. Jerry O'Shea, head of global market insights at Hashdex, added that Bitcoin and crypto assets are highly sensitive to global liquidity and would likely react positively to any indication of the Fed continuing its dovish trajectory. Conversely, a hawkish tone could trigger a sell-off in both equities and crypto. Jernetsk offered a more nuanced perspective, suggesting that the current crypto market cycle is atypical due to regulatory tailwinds and increasing institutional adoption, which might mitigate the impact of a hawkish Powell. O'Shea concurred, asserting that any short-term negative rate decisions would not derail the long-term investment case for crypto, bolstered by institutional adoption and supportive policies from the White House. Stay with us because the market's next move is still up in the air. Next, we're diving into the wild world of celebrity crypto ventures. YZE money. Kanye West YZE Memecoin hits $3 billion amid Trump-fueled crypto and Bitcoin price boom. In a move that has captured significant attention, controversial rapper and fashion mogul Kanye West, now known as YZE, has launched his own Memecoin, following a trend set by figures like U.S. President Donald Trump. The Memecoin, dubbed YZE, saw an explosive debut, surging nearly 1,000% within minutes of its release and briefly achieving a market capitalization of $3 billion, according to CoinGecko data, before settling back to around $1.5 billion. This launch occurs amidst a broader cryptocurrency boom, with Bitcoin leading the charge and the total crypto market value soaring to $4 trillion, partly fueled by increased adoption by prominent figures and Wall Street. West announced the launch via his X account, posting a video and a link to YZE Money, which is described on its website as a project designed to empower users and move away from centralized authority. This venture comes at a time when West's public image has been tarnished by controversies, including anti-Semitic remarks that led to him being dropped by sponsors and financial institutions like JP Morgan in 2022. His personal net worth has also seen a significant decline from an estimated $2 billion to around $400 million. The YZE cryptocurrency is built on the Solana blockchain, a platform known for its Memecoin activity. The YZE Money project also encompasses a payment processor called YPay and a YZE card for transactions using YZE and the stablecoin USDC. Memecoins, by their nature, are often based on cultural trends, jokes, or ideas, with their value frequently tied to the popularity of the underlying meme. Dogecoin, an early example, has grown to become a top 10 cryptocurrency by market capitalization. The trend of public figures launching memecoins has seen varied outcomes. Haley Welch, who gained internet fame from a viral video, launched her own memecoin that experienced a sharp value decline. Welch later admitted to not understanding the underlying technology, facing lawsuits and public scrutiny. Similarly, Donald Trump's memecoin, launched in January, has seen its market capitalization fall from a peak of nearly $9 billion to around $1.7 billion. The Trump family's foray into crypto was partly motivated by claims of being debanked by traditional financial institutions, which they attributed to political reasons. Eric Trump cited the weaponization of banks against his father as a catalyst for realizing the importance of cryptocurrency. West himself has previously expressed strong opinions on Bitcoin and cryptocurrency, notably during a 2020 appearance on Joe Rogan's podcast. He spoke about the potential for cryptocurrency innovators to offer a perspective on the true liberation of America and humanity, contrasting their forward-thinking approach with the perceived stagnation of the traditional political system. But is this a sign of broader celebrity adoption, or just another memecoin flash in the pan? Coming up, we're looking at the on-chain data that tells us if Bitcoin investors are still in the green. Bitcoin SOPR shows consistent profit realization despite price pullback. On-chain data analysis reveals that the spent output profit ratio, SOPR, for Bitcoin indicates a consistent trend of profit realization among investors, even as the price experiences a pullback. This metric, which measures the ratio between the selling price and the purchase price of spent outputs, suggests that a significant volume of Bitcoin has been transacted at a profit. While this might seem counterintuitive during a price dip, it points to investors taking profits, thereby potentially influencing market dynamics. The data also highlights that short-term holders are currently operating very close to the break-even line. This segment of the market, typically more sensitive to price fluctuations, appears to be in a precarious position, with their recent transactions either breaking even or incurring minor losses. This behavior can often precede significant price movements, as these holders decide whether to exit or continue holding through the volatility. But what does this profit-taking mean for the market's next move? Next, we get a crucial warning from Asia about where the smart money is heading. Asia Morning Briefing: BTC demand cools while crypto capital is getting more selective, OKX's Gracie Lin warns. Bitcoin saw a period of stabilization in Asian trading, recovering some ground after a recent slide, while Ether experienced a more significant jump, indicating a selective rotation of capital across the cryptocurrency market. Gracie Lin, CEO of OKX Singapore, has issued a warning that crypto capital is becoming increasingly discerning. This trend is evidenced by a rising ETH-BTC ratio, suggesting a shift in investor preference towards Ether's relative strength during Bitcoin's consolidation phase. Lin clarified that this is not a broad alt season, but rather a targeted move into Ether, influenced by looming macroeconomic catalysts such as the Jackson Hole Conference and U.S. inflation data. Analysis from CryptoQuant sheds light on the cooling demand for Bitcoin. Apparent demand has fallen substantially from 174,000 BTC in July to 59,000 BTC currently. Furthermore, Bitcoin ETF inflows have reached their lowest point since April, signaling a potential slowdown in institutional interest. Profit-taking remains a significant factor, with whales realizing approximately $2 billion in gains on a single day, August 16th, bringing the total realized profits since July to an impressive $74 billion. CryptoQuant analysts characterize the current market phase as a bullish cooldown, identifying $110,000 as a crucial support level for Bitcoin. Market makers based in Singapore, such as Influx, have also observed a sharp decline in retail enthusiasm for altcoins compared to the previous week. However, strategic investments in assets like BNB, which reached all-time highs, and the operational strength of platforms like Hyperliquid continue to attract capital. This suggests that the altcoin market is evolving from a uniform beta trade into a more selective and concentrated environment, even on the institutional side. The market is now less characterized by broad rallies and more by targeted winners, with Ether leading the way as capital remains within the crypto space, but is deployed with greater focus, prioritizing resilience over speculative bets. In related market movements, Bitcoin edged up by 1.4% to just over $114,000, performing strongly as U.S. stocks slipped. Altcoins demonstrated unusual resilience, and Bitcoin dominance approached a 6-month low. Ether, however, outperformed Bitcoin with a 5.8% climb, as traders rotated into major altcoins despite the slowing Bitcoin demand. In traditional markets, UBS raised its gold price target to $3,600 per ounce for Q1 2026, citing robust bullion demand driven by U.S. macro risks, de-dollarization trends, and significant buying from ETFs and central banks. Meanwhile, U.S. stock indices saw a slight downturn, with the Nasdaq falling 0.68% and the S&P 500 slipping 0.26% as investors moved out of tech stocks into sectors like energy, healthcare, and consumer staples in anticipation of the Fed's Jackson Hole Symposium. So, is the selective capital flow a temporary blip or a new trend? Stick around for our lightning round recap, and don't forget to subscribe. And that's a wrap on today's essential crypto updates. Bitcoin traders are on edge waiting for Fed signals. Kanye West's YZE Memecoin exploded onto the scene. Bitcoin's profit realization remains strong despite price dips, and smart money is getting selective in Asia. If you found this info valuable, smash that like button, subscribe to Bitcoin Bulletin for more, ring the notification bell, and tell us in the comments which story you're watching most closely. Follow us on all social platforms for real-time updates.